How can you fairly compare companies that account differently for their research and development costs? In this tutorial, you'll learn how HOLT capitalizes R&D expenses, removing a common distortion created when traditional accounting expenses these costs in some jurisdictions and allows them to be capitalized as assets in others. Some accounting standards, such as US GAAP, require companies to expense R&D costs, but others, such as IFRS, allow companies to capitalize certain development costs if they can demonstrate they are reasonably certain these costs will generate future revenues. Either way, this expenditure reflects management's choice to invest in research and development to help generate cash flows in future periods and combat fade in returns. The economics are the same. Because of this, HOLT consistently adds back R&D expense to net income when calculating gross cash flow, and capitalizes the historic off-balance sheet expenditure in the HOLT asset base. HOLT's treatment of R&D reflects academic research that considers how R&D expenditures have different lifespans depending on the industry. In certain industries, R&D has a much longer-term impact on sales. For a car manufacturer such as Germany's BMW, we look at the past 5 years to calculate the HOLT capitalized R&D value. Let's look at the details behind the calculation for BMW. To calculate the capitalized R&D in its asset base at the end of 2010, we look back 5 years and inflation adjust each year's R&D expense. The total HOLT capitalized R&D value is 8.5 billion euros. This off-balance sheet item is in addition to the 9.5 billion euros of capitalized development costs the firm already included on its balance sheet. So the total capitalized R&D is 18 billion euros. The HOLT R&D adjustment results in comparable CFROI between peers. For example, the history and level of BMW's returns can be compared to those of its French rival, Peugeot, or with another global peer such as Nissan. By measuring the cash return for all assets of the company, including off-balance sheet research and development, HOLT provides true comparability among companies through time. This provides clarity when attempting to better understand the differences in operating returns and valuation for competing companies, regardless of industry, country, or accounting practice.